Good morning, StockTwits Nation. I'm Katy Perry here with Shay Boloor. It is Monday, March 24th, end of March, and things are looking green. Shay, it looks like there was a Truth Social post / tweet / whatever update this weekend regarding tariffs, and the markets are liking it. What did you pick up on over the weekend?
Yeah, I think Trump did a post about crypto or his Trump coin, which I think maybe launched somewhat of a risk-on rally. And I think there's some commentary as well on that April 2nd D-Day or payday that he referenced before. It might not be as bad as a lot of the market is anticipated or priced in. So the market is showing some signs of life. However, I still believe the story isn't as straightforward yet. Like the bounce we're seeing right now pre-market, we're seeing SPY up 1.3%. We're seeing QQQ up 1.7%. Like this is constructive on the surface, and the risk on rally looks like it's going well. But I do believe the underlying trend still remains very unclear. You just don't know what kind of tweets gonna go off, what kind of new tariff talks gonna happen, what kind of response will happen on the east side of the world. Um, it's just so much uncertainty, and that this isn't the kind of opportunity we've been accustomed to over the past couple of years, where any weakness we've seen, like QQQ going down 13, 14%, it's not going to be met with an aggressive rotation back into growth to buying the dip. Like we are fully in a different environment still, even though we're green, we're still testing key technical levels, and we don't really have leadership yet. Like it's kind of fractured, and technicals carry a lot more weight than ever. Like I mentioned, where 200-day moving average is being looked at like a hawk. Nvidia 120, QQQ 490. We're above that now for SPY. So we're what I'm watching specifically is whether this rebound is the beginning of something real, and we see some volume break through these technical levels, or this another pause or a bear flag or like a little trap for the bulls into a broader downtrend for the next leg. So today is going to be a very important day. Honestly, this week will be a very important week on what's going to happen for the next move in the market.
Yeah, of course. April 2nd was, as you said, D-Day, payday. There were a lot of very dramatic posts. It was like, this is the day that everyone will pay. Like, it was like very declarative. And now it looks like they're pulling back. So the tariffs on industrial sectors no longer expected to be coming out on the 2nd. That's according to Wall Street Journal reporting. I think to your point as well, it is a little bit of just shakiness in the market with like people reacting very quickly to things, as we talked about last week. I read a really interesting piece in Yahoo Finance over the weekend that Tesla bulls are buying the stock at paces that have never been seen before. So the believers are still believing, but it is uncharted waters here. And as we mentioned, one tweet, one post could change a lot.
Absolutely. And I think you're seeing a lot of emotion involved with investing for Tesla because it's becoming such a political vehicle now. And I hate to say that because or see that because I'm I could care less about that noise politically. Like I really could care less. I'm all about the technology and that their application and future secular growth themes, not on what Elon's doing on the side. And now it's becoming like, oh, do you? It's the blue versus red. Like I hate to see that Tesla's become a symbol of that. So I think now it's like you're seeing some commentary like, let's short this on Reddit, like let's short the stock to $100 puts, and then like you're seeing the other side of like, this is America. Like, we gotta support Tesla because Elon's a patriot doing what we need as a government. The other side is like victimizing him. It's just like it's ugly. But either way, for me, I'm very micro. I look through. You can see I might be robotic, lack empathy. You can say that, fine, whatever. In investing, it's all about numbers, and that's what I stick to, just numbers.
Yeah, I think, this is a business show. We stick to business, but you're right. It's just objectively dumb. I think the whole like politicizing profit seeking entities to me is stupid.
Hmm.
Uh, they are seeking profit. It's like I always say, like whenever a company like does something that aligns with your social values, it is not because they actually care. It's like they made a call that they would make money based on doing that, and like that's just how it
Totally.
works. And so Yeah, like it's both ways too. Like shorting, like you had Tim Waltz was talking about how he liked watching the Tesla stock goes down with, in all the pensions in his state. There's a lot of positions in Tesla. So that's a little nearsighted. But then on the other
Mhm.
side, why are we trying to do charity work for the richest person in the world?
Yeah.
It's just the whole thing is so bizarre to me. But I think it's just like a sign of where we're at. And I remember thinking like the Bud Light thing was like peak dumb. I'm like, all right, people are shooting cases of Bud Light outside of their houses. Like this is the worst it can get. But like,
This is a
I,
new low,
yeah,
100%.
it's just like, what is happening? But we'll continue to watch all that because it is to your point, it's numbers, but culture is definitely moving things and moving opinion. And with retail investors,
Mhm.
like stuff can happen based on people's feelings. Speaking of feelings, did you see the UConn coach like melt down
I'm
after?
so pissed about UConn. UConn was my sleeper into the Elite Eights, and I think them and Colorado State, and now I'm like kind of tilted a bit. Yesterday was a tough one, but
There
yeah,
was
Dan Hurley having a hissy fit a bit on blaming the refs.
what did he say? Like, I hope what happened to us doesn't happen to you, Baylor. Like that's a good
Yeah,
line. But yeah, that was your snowflake, right?
that was. I'm like
Oh
I'm like
no.
upset. Like honestly, like I don't know if they should have won that game. Like it wasn't on the refs' fault. Like, but they don't.
Yeah.
That was a tough one. It was close. I swear, this is again why I hate gambling. It's just like these disappointments of like, it should have gone my way, and like
Yeah.
the opportunity, and
Well,
like
that
that
was
was my
my
edge.
my next question was how much money did you lose sports betting on Robinhood this weekend?
I couldn't cross that line because there's no coming back if I did.
Yeah.
I'm making sure I don't, and it's becoming addictive. I can see how it is. Like placing limits on spreads for sporting is highly addictive to me
Yeah.
potentially. Like come football season, if I gain this trade now, it's gonna be awful during football season, and I have to make sure I don't do that. Like I've never tried a cigarette in my life because I know I will become addicted. Predictive markets is my capital cigarette.
You're gonna be like chain smoking at a tailgate in the fall with like eight sports betting. Yeah, I saw our big boss Howard Linden was tweeting out his DGen index with you had Flutter, DraftKings. I thought it was a wild sign of the times. But did you see the commercials this weekend? That was basically a commercial saying, "Don't bully the 19-year-old athletes when you lose a bet." Did you see this?
No, but that's
It
so
it's like
funny.
a PSA. And it's like, oh my God, these kids are getting lit up in the
Total.
comments because people are losing money and they're like kids. But that's how big it is. I'm really excited, like the next earnings wave across all of those, just to see like what were the numbers. Because
Well,
yeah,
I mean, first off, Patrick, I get that because Patrick Queen on Maryland, like he's supposed to be a top 5 pick in the NBA draft. I will hate him on any NBA teams on because he destroyed my March Madness this year with that buzzer beater.
was
But
that
like,
a
I'm not
travel
gonna.
or what?
It was a travel, but
Okay,
I was a wrong leg fadeaway, bank shot. Like I gotta give it to him, like great job. But even with the travel, that was a very difficult shot. But
yeah.
Colorado State should have won that game. There were some couple instances at the end where that offensive rebound before they had the final possession, like oh my God, we should have won that game.
I,
By we, like I am Colorado State. No, I'm not that, but like that's what I'm saying. Like when I former degenerate, I feel like
yep.
I'm part of the team. I'm wearing the logo, even though I have no association with Colorado State at all.
Yep. I mean that was me. I mean personally I had just a strong affinity to Rick Pitino for reasons I cannot explain. And was
But
upset to see that happen.
I mean, I think it's adorable the Patino family. Like I would have loved to see
You
father
know the
son.
lore with them though, right?
Yeah,
There's that but
it's
like I
nuts.
like the trajectory for him. I think that's like a comeback. He's got the scarves on now. He's like, "Oh, my grandchildren." It's like, "All right, we don't forget what happened in 2009, but like
It was
good for
14 years
you."
ago though. That's freaking
Yeah.
nuts.
I like to
But
see a redemption arc and like, hey, uh
I,
good for him.
I will say going back to your original point before I went off on Patrick Queen for no reason. Yeah, you have to see that this is not good for DraftKings. Like Robinhood got a
Mm,
lot of those eyeballs that DraftKings was accustomed to before. Now they have a new competitor. Like this is how, and it was kind of easy for Robinhood. All they had to do was partner up with a predictive market, and boom, new competitor. They didn't have to. They don't have to do the S&A sales and marketing costs that DraftKings does to have go and download the app, get into their ecosystem because they have millions of gold users already. No S&M sales and marketing costs. Just you have this option here. As simple as that. Guess what? Everyone and their mother has Prime membership. Once it becomes federally legal, Amazon will be having a similar application as a DraftKings because they're already trying to get into live sports. Like Robinhood this past week validated my bear thesis on DraftKings where it's a commodity. There is going to be a very, very low barrier of entry once it becomes federally legal. And I'm not saying it's a dying stock, but you can't base your investment on this next couple years like estimates from the street because they will change the margin side once it becomes more and more popular. So like Robinhood, honestly, like it was a great move. I disagree with the ethos of the move, but as a shareholder, you have to love it because there's a TAM expansion, margin expansion. That take rate on every bet was like 25 to 30%. I don't know what their take rate of that take rate is, but it was a fat take rate at the end of the day as a consumer, and I don't think that stopped people from betting on there. So
it's also just from an execution standpoint, is there a better run fintech than Robinhood? And like sports betting is money movement transactions. Like they're just shipping things. They're a well-oiled machine. Like it's interesting now. Everything is fintech almost, and yeah, I think they have such a unfair advantage. What is interesting to me though is like, DraftKings has dodged some threats in the past. Like remember when Barstool Penn like that fell on its face, which they had a lot of like brand assets in Portnoy and like a built-in installed degen base, I guess you can say. And then even ESPN, their bet product kind of flopped. So it is. Yeah, I'd be curious, like, what's DraftKings doing that has gotten to them this point, but is it going to hold into the future? And like,
I mean, it's a great point to be honest. Like, first off, Disney, they don't really know their audience for this. Like ESPN, like I just don't think they have their finger on the pulse. I make the same argument for Penn. Like Penn is like brick and mortar gambling company essentially. Like they're trying to digitize it, but clearly they didn't have their finger on the pulse because they didn't double down on Portnoy's brand and Barstool. They just like try to loop it under their umbrella and not really help support it to evolve into something else. And that's why the brand was kind of dying out and Portnoy just decided to do his own thing. It's working. I think in 10 years, people won't be viewing Robinhood as a brokerage anymore. It's going to be a media company. And it started as a brokerage, evolving into this like massive media company with a huge fintech arm, but it's going to be so many different things like across eyeballs. Like I think when I mentioned last year that the new currency will be eyeballs in a couple of years, like I'm noticing a trend, and that's going to be like the new corporate strategy for a lot of companies. I think Robinhood's adopting that 100%. Where any platform has the most eyeballs, that's going to be the most valuable moat or competitive advantage in the next 10 years. And that's why they're morphing into a media company. And if I'm not invested in it because I just really don't know how to value that stock. It's impossible. They're doing so many things at once, and I don't really have a good comp on it. It's not Coinbase to me. Coinbase is not a great comp for Robinhood anymore. Right now it is, but not what they're becoming into. So I'm a spectator on the sidelines, but love to see it with my corporate strategy goggles on. Like they're doing a great job.
Yeah. Well, Robinhood is an interesting one on the media angle. They have Sherwood News, their media arm, so they sell some ads against that, but they still have the brokerage advantage and on the crypto and stocks, where it's just like transactions. They're just like minting money. But you're right, they have multiple facets now. They haven't since they launched this Sherwood Media brand though. I don't think they've gone too hard at like trying. Like I feel like they could take down CNBC right now if they wanted to. I feel like they have the capital, they have the audience, but like I don't know. If Sherwood is like a decent publication, but I don't think they're like doubling down. But it is another way that they make money, and I think to your point, at the end of the day, it is about just attention and eyeballs, and that's why, X is going all in on the fintech stuff, and they're doing their own big March Madness thing, which I've gotten like 17 ads for. I don't know if you keep getting. I'm like, I
Yeah.
don't want to do your bracket, but everyone wants a cut because I think it's the where you're getting to that is like eyeballs plus transactions equals like you are gonna just mint money, and that's what Robinhood's doing. So we shall see about that. Let's pop on over to see what's trending right now over on StockTwits. Of course, we have the What's Trending feature where if you hover over a specific ticker and it's moving for any particular reason, you can see what's going on at any given time. I'm just gonna open up my view here. I see. Let's take a GameStop moving a little bit. They have earnings, I think Wednesday. I have not been following any of their recent moves. Have you, Shy?
So there's one. I saw a post from Value Sense, their Twitter accounts. Vice president of Warner Brothers leaves after 16 years to join GameStop as a senior tech advisor. So this could be maybe catching a bit of that. They're getting into entertainment space of some sort. Again, I just don't know how they. I think they need to file They need to file bankruptcy and just like sell the debt assets and turn it to something else through the bankruptcy courts. Um, they just have to get rid of so much of their dead weights in order to actually invest in the company and
Yeah.
or the MicroStrategy route. Just go crypto, Bitcoin. Who knows?
Start buying Bitcoin. Yeah, I'm reading. There's an analyst says there's no clarity there, which is like I feel like their story is changing constantly. I also feel like to your point about just like the attention economy, like they were a meme years ago, but like they're not anymore. Now it's freaking Saratoga water and like whatever. Like you're hot when you're hot, and then it's like how are they going to get back into the cultural zeitgeist? I think there's a lot of confusion, but I actually might listen to that earnings call. Probably do it on StockTwits, so I can just see like what are they. I'm just curious, like what are they gonna say? What are their moves? I have no idea. So that's always exciting to when you just don't know what's coming. Let's look at here. We also have Rumble reporting this week. That's the conservative video platform. They're up over 5% today. People excited about those guys. There's another media platform, Shy, that just feeds on our dopamine addictions.
Yeah, I mean, this not to be honest, this is not a real business for me. I don't understand who thinks it is. Like, I think it's just a
I kind of
vehicle
I'm like,
to capture
can I go to
alpha.
rumble.com or is it just an app?
I don't even
What
know.
is this? Okay, that's a little, I don't know. So yeah, another one we're tracking for this week. We have some economic data coming later in the week as well on Friday. Some big inflation data. Haven't read what the analysts are saying about that one, but I think that plus the tariff, Shy, like you said, this could be a real pivotal week heading into the next quarter.
Huge. It's going to be huge, and I think um, the reason I'm saying that is we're also exiting seasonal weakness. Like March is typically has been a lot of bottoms on corrections. Like I think 4 of the last 5 corrections happened the first quarter of the year, and it bottomed in March. So you're seeing also a lot of like data out there showing a lot of people have been selling stock, and it's been so much on one side that a lot you have to ask yourself now what's being priced into the market currently. Are the worst case scenarios for tariffs priced in? Nobody really knows. Market's a forward-looking mechanism. Like nobody knows if it's 3, 6 months, 1 year, but you have to ask like, is the market pricing in the first half of this year being a mess? And if that's not the case, will it catch a bit? Even if it's like April, tariffs are still there, but May no more. It might catch a bit because it's looking outward. However, like I do think the impact for the past month is going to be felt across the board during earnings season. I think a lot of earnings are going to be very messy, and the earnings season starts again in 3 weeks, I think. So it's going to impact them. A lot of people front ran these moves, potential tariffs, and now affected their business spending, and you're going to see somewhat of lighter earnings. But again, I don't know if the market's going to be like expecting that in this correction, and good enough earnings will be enough to catch a bid. It's just a different environment. But all I know is that for above the 200 moving average, it's always good in the world, and we're going to survive. There's not going to be a bear market or any kind of capitulation. So yeah, we'll
Yeah.
find out soon.
I mean, I think that's the theme. As you were talking, I was browsing some headlines. I'm curious. I've never heard you talk about ETFs. Are you like, what are your thoughts on that? Do you do any of the ETFs? Like, I think I was reading that retail investors increasingly adopting them, but more so some of these more speculative vehicles. So 3x leverage, bear, whatever. What would you have any opinions for our audience on ETFs generally?
I think 90% of retailers should go the ETF route. I dedicate hours a week on reading sell side research, reading up on my companies, listening to like I do the work on the micro side because I just love it. It fuels me, and like I don't need a reason for it. I actually thoroughly enjoy it. And I feel like me specifically buying an ETF doesn't make sense because I put in the hours and work to understand these companies, and I see an angle, and I think
Yeah.
I have been outperforming the market. We'll see how long in 10 years what's going to be the case, but the past couple of years I have. So I think for me, no, but I think for everyone, most retailers, yes, because you guys have W-2s, you guys have 1099s. Like you can't commit the 40 plus hours of just like being in this and tracking and researching and updating, refreshing your models. Like you just don't have the time or bandwidth. So yeah, I mean, I think I recommend always 90% in ETFs, 10% pick specific growth stocks, and you'll do well with that strategy.
Yeah, they also it's the ETFs are really evolving. There's the one now where you can actually get exposure to SpaceX, and so like there's different.
Hmm.
One of my friends this weekend was talking about like a high yield. So it's not. It's like I remember like when I was working at a brokerage, it was like 2019 to 2020. It was all about the thematic ETFs. It's all anyone cared about.
Hmm.
ESG ETFs were huge, which imagine that era. And now they're getting a little more specialized, but always interesting to see your take on that. Elsewhere in the markets, we also have a bankruptcy, 23andMe. Shy, did you ever do one of these tests yourself?
I did, and it was totally wasted because I'm 97% Persian. So I was like, I got nothing from that.
What's the other three?
Something Northern African.
Cool.
Yeah, it's just a bunch of random stuff from Africa. But yeah,
Yeah.
yeah. So it was pointless for me, but my fiance had like six different ones there, so it was cool to see hers.
Yeah.
Regarding the bankruptcy, I kind of want to delete my 23andMe
Same.
application because who knows who's gonna acquire it now, and I'm just like, ugh. Like there's a lot of
Yeah.
data there that someone can acquire.
That was one I did mine, and I remember I did like the test, and as soon as I put it in the mailbox, I was like, ooh, like that happened. Like you can't it can't get it back. But then I doubled down and I actually bought like the I don't even know if this was worth the money, but like I could download my genome sequences. Like
Oh.
you can literally get that granular and like down, which also means they have that data. Um, but yeah, I doubled down and got the like, what time should I go to bed at night? What time? Like, I think they just tell you things you want to hear. Like mine was like, you're an elite athlete in the top 1%. I was like, I don't think so. But yeah, this is one to watch because it looks like their CEO Anne Wojcicki stepped down, but she still wants to be involved. So there's like multiple bids going on. I just don't know who's going to make a play for this. So
Well, there is somewhat of a play. Again, putting my corporate strategy hat on, what I would do. Um, I think they should have been the Aura Ring before the Aura Ring existed. It would make too much
uh,
sense. They had that data. Like have something that is a repetitive consumer product that just everyone needs. I think behavioral health is a massive space in the healthcare industry that you can like whoever's in that space probably wants to acquire that data set to strengthen whatever they currently have. I think Apple is clearly doubling down on health on their phone, through their iPhones. Like that's an easy synergy. Like there's that data set is a gold mine for a lot of like companies who are in this healthcare space. I'm also like, this is also referencing telehealth. Like Amazon's getting to telehealth. Like, you don't think they're gonna love this data set for their Prime membership? Like, they can link up the
Oh
Prime
my
members
God.
with this and actually tailor advertisements toward them, or like health conscious things towards them for the telehealth space. Hims and Her Health would love this as well in their offerings. Like, I think there's a world where whoever acquires 23andMe license that data to all these players who want it, and they become like this Reddit of healthcare data. Where Reddit, everyone partners up with Reddit because they pay that premium price to get the sentiment data of true raw data of what people think about things. This is the true raw data of what makes people people. They can license that out to a lot of people in this healthcare space. That's the route I would go. I'm shocked they, I think they maybe, I actually don't know. I haven't looked into them, but they
Yeah.
should have done that. If I was working on their team, I would have heavily pushed that as like this licensing model. Maybe there's some restrictions regulation wise that you
Yeah.
can't do that, but that's the easy route, to be honest, on what they
Yeah.
should do.
I never, oh my God, advertising based on your DNA. It's crazy. But they
Yeah.
know everything else about us. So that's kind of how I'm like with the data. I'm like, eh, anyone could find out anything. Like I was part of the big Experian hack. It's like, you know, it's out there. Good luck piecing it together. My name's
All you
Katy
had,
Perry.
all you had,
Like,
to, yeah, all you had to do was ask. You didn't have to hack me, guys. I would
yeah.
have told you.
It's like it's like I'm hard to track down generally because I have like a name that is hard to Google generally. But yeah, I think the licensing thing's interesting. I want to dig into that. Maybe I'll do that, and we could loop back tomorrow because there's must have been some regulations or something on that. But like that is a gold mine. Even
Mhm.
for a pharma company, like there's just like wild data set
Yeah.
to think about. Um, looking around, what else is going down in the market? It looks like people are still talking about this DoorDash Klarna thing. I think we touched on it briefly, but the memes continue. Um, I did go back over the weekend and like reread the release, and the release was more about using it for groceries versus Chipotle. I still think it's an interesting move, and I'm curious how adoption's actually going to look for that. Do you have any opinions on that one?
I think it's a dangerous trend we're going towards in society, where you don't have to pay your sushi up front. You can like kick the can down the road. I think a lot of people. I could give you guys an example for me specifically, where TV. I bought a TV for Christmas, for my fiance as part of her gifts, and I was like, oh, 0% interest rate, like might as well. After 1 month, I was like, I can't deal with this like balance. Like even though it's like interest free, like I don't like seeing numbers and a
Mm-hmm.
balance like carry over. I just can't do it. It irritates me too much. Paid it off. I think those are I'm putting myself in like the responsible bucket, the irresponsible bucket of people who want things that they can't currently afford, and that's gonna snowball eventually. Like people like, oh, it's just I'll pay a couple $100 in just fees a month. Like that's survivable. Those
Yeah.
you're, they all they eventually they're gonna only be able to afford those fees, and that debt is just gonna grow and maintain and higher until you just can't breathe and get above water. And you're
Yeah.
gonna there's only a certain point you can refinance, kick the can down the road until it breaks. I think
There's
there's a lot of people that are gonna be like that.
yeah, there's the like responsible spending piece, and then for me, I go to the society like what is wrong, what is broken, where there's consumer demand for this, where you're gonna pay for dinner in 4 installments. Like that seems something's like not right there.
Hmm.
If we're talking just like single meals, but I think I mean, obviously the credit card issue we have in this country and elsewhere. But I kind of go to like, yeah, there's people who are just gonna like overspend. Maybe they want to get takeout and they're not getting paid for a couple days. Okay. But I'm like, yeah, why is this necessary? I don't like that it's necessary. Um, and that is the opening bell. How are we looking here? Let's flip back over to the charts on StockTwits and see what we're looking at. I think still like going to be a wait and see week, which is honestly some of the more fun weeks to be an investor, I think. No one knows what's going to happen. Seen anything interesting here on the QQQ?
A little fady, not a little. I mean, it's actually tiny amounts. It's just I want to see. Like, Nvidia just went below 120. QQ is continuing the selling so far. Like QQ needs to go above 490. Like it just does. Nvidia needs to stay above 120. Like it needs to, and it is right now, but it really needs to prove that this is a real bounce, not just a continuation of a dead cat bounce, and that now we're going to reject to a new low. Like this, there needs to be sustainability, and I'm like waiting to see that. And it looks like QQ is bouncing a little, which is good. There definitely is a disconnect between SPY and QQQ. Um, risk on is risk on. IonQ is up 5%. Tesla's up 4%. Nvidia is catching. It's at the high of day now, so this is great. So the specific level for the 200 days 120.82. And Tesla has a ways to go for their 200 day. Tesla's 200 days at 295. So like they have a lot of construction they have to make up now. And that's going to take some time. You can't just V-shape once you broke down a lot of key levels. It takes time to recover those levels. QQ's now returning a little lower.
QQQ, of course, one of the title sponsors of March Madness. I always thought that was an interesting.
Is it? Oh my
yeah,
God, that
it
is
is.
interesting.
Actually, ETF marketing's fascinating. What I do know about it, they have a lot of these big funds have a lot of budgets, but they are very restricted into where they can advertise. So they'll just be like, sure, we'll just do March Madness, like cut the check. But yeah, you check it out. Like they're like the top sponsor. They do a lot of college sports, which is wild.
Wow, that is wild.
I was just looking up. I know Dan Ives was yapping about Tesla last week, and I was trying to look up what he is saying about. Do you remember what he said his target was? It was like in the 400s, right?
I mean, if you believe in Tesla, you can have wonky numbers because it's one of the most polarizing cases where if Elon actually solves autonomy, it's a game over move. That's like a checkmate move on the Tesla stock. Like they will, it could be $1,000 within a year if they actually have autonomy solved, and you're seeing FSD revenue come into the company because those are 70 to 80% gross margins, guys. This is an OEM company right now, technically with some other lanes, but really the market views them as a car company, and that's comes at a 20% gross margin, really. So when you see 80% gross margin now being reflected in the stock, that's going to become more of a weight of the total revenue. Game changer of a company that you just view them in a totally different lens. So I do think that it is going to be like much higher price targets if you're a bull. So I'm not surprised to see Dan Ives, like, because he believes in the story. Wow, Griscon's taking it major. This is great news so far. So we're catching a major bid. IonQ's up 12%. Whoa. But yeah, I mean, Tesla's up 5. Like, this is a great risk on day. I hope
so
it
for
stays.
you, what is that? Are you doing anything today then? Are you still like being okay, chilling out?
I'm not. I might actually buy some downside puts on QQQ because we're still below the 200-day on the QQQs. So that's something that's I want to maybe buy some protection. I haven't even looked at my portfolio how much is up right now. Let me double check that too.
Yeah, I was also. Oh, go ahead.
No, sorry. I was just.
Yeah, I was flipping around the what's trending. I know Intuitive Machines looks like they just reported LUNR. They're up 22%. It looks like if we bop into the why it's trending, they had their fiscal year 2024 earnings. There's mixed reactions, but their revenue and backlog dramatically increased. And the net loss was lower than expected. So another space stock to watch among the group. I know you were tweeting about ASTS over the weekend, or was it Friday, Shy?
Over the weekend, I was for sure. So
what else would you be doing on the weekend except tweeting about a space stock?
right,
really?
I have no life apparently. No, because on my podcast to do investing in the boys, we covered ASTS on our last episode.
Okay. What were the
And that
takeaways?
it's a polarizing one because this one is it's same category as a Tesla, to be honest, where there's like first off a cold following on FinTwit. Like there's a great not cold an army. It's just saying there's an army where a lot of people love ASTS or they hate it, and the reason for that is they made $4 million last year. Four. They're supposed to be making $1.8 billion in 2 years. They're going from 4 million to 1.8 bill,
How does that?
and and now they're priced at $5.6 billion or $6 billion, just say. So the reason for that is they are just becoming like there's a world where they're changing the whole game for connectivity, like the whole game. That it feels like a too good to be true scenario, but it really isn't because the next great leap in connectivity really isn't the traditional routes of like the server rooms or the fiber lines. Like it's going to be in the low Earth orbit space economy. That's why it's like the
Mhm.
next industrial revolution after AI because there are so many applications that will evolve that weren't able to evolve currently. And
Yeah.
ASTS specifically, like they're not launching satellites. Like they really are laying down the foundation for the new communication layers that sit above the telecom grid, not beside it, above it. And they're building the space-based cellular like architecture that plugs directly into the existing mobile networks, designed not to replace the infrastructure, but to complete it. So like evolve it. It's an add-on. And that's a very key distinction to understand why ASTS can go from 4 million to 2 billion because they aren't just transforming the whole telecom industry. They're broadening the connectivity economy because it is an add-on. It's not going to be constrained by physics, economics. Like it's you, they don't have to build towers. They really is no competitor to ASTS because people say, oh, they're a competitor to telecom operators. No, they're enabling their future growth for all these telecoms for the next leg. It's enabling them. It's very similar to what it's totally different industries. Like Nvidia enables a lot of the enterprises now to what's evolving next in growth themes. ASTS is kind of doing that for the telecom companies where it's been a dinosaur of an industry for
Yeah.
decades.
Who was their
Now,
first partner? Like it was a European telco.
Verifone, Vodafone is
Vodafone.
one.
Yeah.
Honestly, every telecom partners up them. Verizon,
Okay.
AT&T, Vodafone. I actually don't even know about T-Mobile. I know T-Mobile has something with Apple a little, but like it's totally different. It's text only. Like
Yeah.
it's very watered down. AKA that's the Apple way, watered down any kind of growth apparently. Just look at Siri. But yeah,
Our
it's
producer tells us T-Mobile's with Starlink, and that's what I was gonna ask you.
oh
Like,
Starlink.
how how do you think about Starlink also going to be an infrastructure layer for the telcos, or are they trying to compete with them?
I get this question a lot because clearly Starlink is somewhat in the same space because they both use LEO satellites and they both offer wireless connectivity. And everyone's like, "Oh, don't bet against Elon. Like Starlink is clearly gonna be better." Just look, it's the same argument for Rivian and Tesla. It's gonna be like for Starlink and ASTS. But I think it's really important to know why they're different. And to answer your question, like the reason they're different is Starlink ultimately has a vertically integrated ISP, so their value chain runs through hardware sales. Very important to know this. It's through hardware sales, so like the
Ah,
terminals and routers and consumer subscriptions. It requires a lot of upfront faith and adoption, physical installations, and a bandwidth model that, let's just be honest, it's going to limit their spectrum and satellite throughput. Like it's going to. Where ASTS, by contrast, operates on a whole different frequency where it's design purpose built for mobile grade interactivity. So think Starlink is the business of selling internet. ASTS is in the business of extending networks. Totally different add-on where Starlink is kind of a totally different avenue for connectivity. It's just it's less of a scalability to be honest because it requires a lot like you're going to need users to degrade like you're gonna have to have like they're gonna have to launch thousands more satellites and they're gonna have to be a lot more physical component where ASTS is just like really is an add-on
yeah.
for all telecom companies where It's
Yeah.
going to be a totally different way cell towers work, and I think both will win because they're both in totally different, do totally different things, and global connectivity for the world. It's a freaking massive TAM. It's
Yeah.
huge, so they'll
Yeah.
both do fine.
Um, yeah, and then with ASTS, the reason they're not, so it's 1.4 billion by next year, you said?
2027.
2027. So what has to happen for them to reach that? Is it like the infrastructure getting the satellites up, or what, like, what do they have to do to make that leap?
Uh, that's a good question. I mean, first off, scaling that is, I just said 4 million to 2 bill. That's tough. I mean, it's going to be somewhat of, you're going to need regulatory approvals for one, clearly, because they're
Mm.
innovating something that hasn't been evolved in decades. They must, ASTS also, there's some risk where they have to show that the handoff between the terrestrial and orbital towers are seamless, and the latency between what we all expect in connectivity and our performance has to be really great. And if they can execute, the upside's immense because, like I just said, the TAM on global connectivity is nuts, and they
Yeah.
have the partnerships in order to do so. So I think there's right now 3 billion people who still lack reliable mobile coverage, and I think that's a massive amount of people.
Yeah.
And their Block 2 satellite is really the game changer on like if they can cross that finish line to get that $2 billion.
Yeah.
And if they do, that's why it's like it's a very great spec play because if they solve it, wow. If they don't, ooh, it's they don't have the fundamentals to back up their cash burn rates. So it's highly risky, but in space economy, I think that's a really interesting angle to the space economy.
Yeah, and I think it's why you need to dig in to these, like, and maybe not put your entire weekend towards researching space stocks like you did. Sorry. But like even you see, even in like business news outlets, like putting Starlink head to head with ASTS, and what they're fundamentally different businesses, and so you could go
Hmm.
even in the launch technology and the software side, like everything gets lumped into space stock. Um, and it's all sort of fueled and part of the same ecosystem, but they're very, very different businesses. Um, and so, to your point, I think you could, if you are bullish on the space economy, there's plenty of ETFs. But if you want to really understand specific types of business models within there, you gotta do the research. Um, I do want to ask you, Shy, because it's crazy. We're winding down Q1. That's nuts. We
Oh
got
wow.
Q2's coming up. Do you have any, are you changing any strategy for Q2? Do you do like a reset, or you have your sort of big picture ideas and you're just chugging forward on those based on what's going on?
Yeah, so as a thematic investor, I do invest for 5+ years out. So quarterly, I do look at who's been lagging, who's been not, but like it's not like a rebalance of the S&P 500 where, oh, you're the laggards, you're out. Let's get the new hot shots in. I do that at the end of the year a lot, where like, what's not working? Why is it not working? Is the thesis cracking? I have to revisit my initial thesis. Every single company I own in my portfolio, I have a bear thesis, so I can like keep track of it, see if that has evolved, and that's why the stock's struggling, and does a risk and reward make sense anymore? So, I mean, Q1, there's a couple names in my portfolio that they're in the doghouse, and they kind of have to prove their place in my portfolio
Who's the doghouse
quickly.
stock?
Trade Desk. I mean, Trade Desk is a doghouse stock.
Yeah.
They had an internal F up,
Yeah.
and
What
Jeff
what
Green
what
owned it.
happened?
So their launch of their new AI platform was a complete
Okay.
fumble from a lot of like what the ad agencies loved about their platform. They removed those features in their newest and greatest AI platform,
Hmm.
and that was an operational F up because clearly they didn't check in with the agencies of what product, like what features they use the most and what they're willing to like not have.
Yeah.
And I think that was why he was referencing in that conference call. He was like, he was a great CEO. He's protecting his team, but as a shareholder and analyst, like we got no answers because he was willing to protect his team over giving everyone else visibility of what occurred. And because of that, it was a very noisy quarter. and ad industry is very cyclical. So if they miss that drastically, they're like, oh, is this the other end of cyclical risk associated with this industry? This is no bueno. I'm gonna get out because it was a very expensive stock before. Like I think it was 100 times EBITDA multiple before the print, and they miss aggressively because of the fumble of the new platform, where it took a lot of these ad agencies more time. And in this space, time is currency for them. The more time they spend, is less they're spending on it, and it's all about speed, speed, speed. So like things got delayed a bit, and it snowballed,
Yeah.
and they caused some massive revenue misses. Like millions of dollars were like delayed, and they're now he has to recover. Like he's hiring a COO because I'm shocked they didn't have one before. Uh, they're hiring a new one because they have to make sure this doesn't happen again. I
Yeah.
guarantee some SVPs got fired because maybe they slept on the wheel on the admin stuff.
Yeah.
Hiring more engineers because the UI is ugly on the new platform. It's not easy to use. It was a really bad internal FUB. So that's part A. Part B is if we're in a recession, ad spending gets tanked. Companies don't spend more money on ads in a recession, consumer recession. There's no point. It's dead money. Consumers can't spend more money. There's no point of putting more products in their eyes because you're just teasing them because they can't actually buy it. So that was part B of like, oof. Now that was the fuel for the fire in the consumer recession and got 55% down.
Yeah. I think the ad industry is wild because you have these big players like the Trade Desk. This is probably not a name people know, but it is really like a significant percentage of advertising you see online is running through their system. So you have the platform direct model. If you're a Meta, you're Google, you have your own platform. Trade Desk kind of assembles inventory across multiple properties and makes it with it. They centralize it basically so they can compete. Other websites can compete with the big tech platforms, but there's always this kind of I feel like advertising, maybe under other industries. I just know advertising. Like there's this undercurrent of like resentment, of like people feel like they're getting ripped off. The agencies feel like the platforms are squeezing them. The clients are pissed. They think the agencies are taking too much because the media businesses, they just take a cut of the spend. So it's great business to be in if you're buying media because you just take your cut. And if someone's putting millions and millions of dollars through, but I think sometimes when this happens, like what I'm seeing is like, it's funny. I was just, when you were talking, I was looking up articles about it and I couldn't even find many because there were so many class action lawsuit press releases. Just not good. But Digiday, which is a trade publication focused on digital media, it's like it's the tone of like, it's like a frenemy. You know, people, it's like a necessary evil. So I think the agencies also kind of like to see them stumble a bit. Maybe this gives them a little more leverage. And so you have that pressure as well. It's an interesting ecosystem because there's a lot of people who collaborate on a daily basis that like fundamentally don't like each other. I wonder if it's probably like that in other industries, but that's why the Trade Desk too is like everyone's sort of like cheering it, even though it's bad for their industry at the end of the day. Who else is in the doghouse with the Trade Desk?
I mean,
UConn men's basketball.
UConn men's basketball.
Yep.
Patrick Queen on Maryland. No, I mean, there's a couple. I mean, MongoDB has not performed like I thought they would for sure. This is agentic AI hasn't really began yet, so like I'm giving them somewhat of a leash where I'm so bullish on AI. Like I'm a thematic investor. I will give a much longer leash for MongoDB because I see them fitting a very important niche within the database ecosystem in agentic AI world. Where for Trade Desk, like I don't know if I need a standalone ad tech play in my portfolio. I don't because I have Amazon, I have Mercado Libre. They both have ad revenue coming through their platform, and it's just another leg where I get that ad spend ad industry exposure already. For Trade Desk, like I just don't know. For MongoDB though, for this world we're about to enter, data is gonna freaking explode 100, 1,000x. I love software companies with a consumption model. MongoDB is one of them. The data infrastructure angle for this ecosystem is going to be huge. They just haven't performed yet. And I think it's a combination of the like kind of reorganizing their strategy a bit, going towards larger enterprises. Their non-Atlas side of their business has been a real drag, and Atlas is essentially their cloud. That's the AI. That's their AI bread and butter. So this is another example of when Tesla goes down from EV sales, it doesn't have that much of a weight for me on like, okay, who cares? Like I'm in there for AI software. MongoDB, it's the same thing, non-Atlas, like who cares? That's not why I'm investing in the company. But it's been a struggle. Historically, though, this is the cheapest valuation it's been in quite some time.
Mm-hmm.
So if agentic AI becomes a reality, I think it's going to become a lot sooner than people anticipate. They're going to see the revenue reaccelerate in top line. But if I'm seeing other names in the space see that reflected in their fundamentals, but MongoDB is kind of still lagging, I'm wrong. Maybe the standalone NoSQL application of the databases isn't a necessity as I thought it was, because you can still get it on the hyperscalers offer similar product to what MongoDB offers. I think the cloud agnostic angle is going to be really important in the agentic AI world as well, where a lot of companies aren't just in one cloud, they have multiple. I think the data gravity component or the flexibility of data is going to be imperative. And that's why I love Snowflake, MongoDB, um, Palantir. They're all LLM and cloud agnostic. It doesn't matter what cloud you're in. So like theoretically should work. It really should, but I just have not seen it in the past year. So, and also every engineer I talk to, like they don't like the MongoDB app. Like they
Mm,
don't like the actual tech. And
yeah.
in corporate strategy, I work with engineers. I don't do the back end works. Like maybe they're onto something, but Doghouse potentially if I don't see anything turned around like this year.
I mean, talk to the users of these products. It's similar to asking consumers about
Hmm.
retail brands. I don't want to put you on the spot, but you started hinting at something that I always wondered about. And on the cloud side, um, like, do companies have multiple? Stupid question, but do they have could you have Azure and Amazon, or like, what's the reason for having multiple cloud providers?
Oh, you could have an Azure and AWS, Google Cloud. Like people aren't just fixing on one vendor.
Okay,
I think it's really important because if your cloud service provider, something happens to one of them and all your eggs are in that basket, you're so screwed. You're
yeah,
so screwed because your business stops. Like
yeah,
your enterprise stops. So if that's why it makes sense to have multiple cloud service providers because you're not so the risk on one bad agent or bad um I don't know,
one
breach of
instance,
yeah,
yeah,
one instance, like you're not so caught with your pants on the ground, like it's gonna hurt, but it's not gonna be fatal for who knows how long. So I think
interesting.
that's why, and I think
So the bigger companies are always like fighting for share of cloud. I always thought it was like they just pick one, like, oh, we're Azure, we're Amazon. You're saying it's like they're allocating certain amounts to different things. They're all fighting over that pie.
yeah, exactly. So
Interesting. I never
yeah,
thought about it that way.
yeah,
Fascinating.
it makes sense too because like there's certain features on each one that they're much better at,
Yep.
and yeah,
Interesting. Look at this little cloud 101. And we're nearing up the end of the hour, but I do want to bring up a couple big stocks that Brian talked about last night. Of course, Brian debuted his new show at 8 p.m. on Sunday. He had some tough counter programming last night. But once we're through March Madness, all of you should be only watching his show on Sunday. But he brought up a couple stocks, one being Amazon is something he's watching this week, and then also Nvidia. Either of those two for you, Shy, like for this week, I think he was talking about Amazon could grind higher if it stays above its 5A moving average. Do you have any thoughts on that one?
I mean Amazon showed a lot of strength. I'm going their daily chart. The 190 level is a huge level for them, and they just like sat there as the market was deteriorating a bit. And they were showing a lot of relative strength last week, where they were they bounced before the indices bounced. So to go off of what Brian was saying, their 200-day moving average is at $201, 201. They're above that right now.
Mm-hmm.
Their next level above for that is I'm seeing 215. Like that's a quick boom, 5% bounce that they can just draw. And they were showing a lot of relative strength last week when the market was eroding a bit. So that's a clear looks like a winner or a leader in the market balance. And Nvidia, oh, Nvidia is interesting because they're not like really.
Yeah, he was
QQQ
saying.
is at a high of day, and Nvidia is lagging. It's below 120 still, and that's a massive level for them. It looks like it's a resistance so far today.
All right, so we'll keep an eye on that one too. Any other big things you're watching for this week, Shy? Things that you're clocking that you think other people should as well?
I think there's gonna be more volatility as we're not over. So like I'm looking at the VIX. VIX is at an 18 handle now. It's not cheap, but uh, the mean is usually 14 to 15. So if it returns back towards the 15 handle, like I'm buying long-term protection. But also like I'm only gonna do so if QQQ is below 490. Like I'm watching QQQ like a hawk. Like it's now at the 200-day moving average. It's sitting right there, up 2% today. Every market rally we've had this going up pre-market has been faded. Something happened intraday where we're at the low of the day moving close. This is an interesting level where will we see profit taking? Like this has been the trend past couple weeks where big gap ups. There's been profit taking because the narrative hasn't really changed yet. There is so much uncertainty and noise. Will that change? That's what everyone's waiting on. Like we're just on pause mode. So I'm looking at the VIX to see like if it erodes a little more and hedging becomes cheap again, and maybe I'll get it if we're on the 200-day moving average. But if and also another one is Nvidia, the pre read on what's going to happen in the market where Nvidia is not that high today. It's below the 200-day moving average. It can't break through. Everyone else, the breadth is widening for the big tech, but Nvidia is the kingpin of the new digital economy. Can the market rally and Nvidia not be above
Yeah.
the 200-day moving average? There's a lot. It's a wait and see approach for
Yeah,
sure.
yeah. So we'll be watching all of those this week. We'll watch the crypto markets. We'll see what as we approach April 2nd, what might happen or not. And we'll see you guys back here at 9 a.m. tomorrow to go over the headlines again. Thank you for joining us today, and we'll see you next time.